I think we are live. Let's quickly give it a little second to load on in just to be sure. And if you guys can see me right here, just quickly type yes or something in the chat box so I know for a fact if y'all can see. Matthew is in. He says, yep, you're live. All right. So, today is going to be a very interesting day. Not only because of the FOMC on its own, but mostly of everything that's going to happen around it. I mean, as you guys have probably already heard from my videos over the past couple of days, I'm not going to call it scared, but we're skeptical that something interesting is going to be announced. Let's quickly refresh this because I think things have fallen quite drastically. Here we go. So we think, at least thus far, there's a pretty good chance that Mr. Jerome Powell is going to say something that's going to to not that positively affect our coins on the short term. So long story short, let's quickly grab it here. There's a lot of people right now who are saying this exactly right here. It doesn't matter what the rate decision is. Lower by the end of the week and much lower before the end of the month. I don't know. I don't really share that thought process. As it currently stands, I'm more along the camp of things are mostly going to be affected by whatever the rate cut is going to be, which is most likely going to be 0.25, right? Mostly 25%. And then from there, there's a very high percentage chance that the market's going to have some little kick. Again, I cannot guarantee it. Later on, my analyst will come in and give his thoughts on the market right here. But a little move towards the downside. And then, since we already sold off a little bit to scoop this up, we just got to scoop it up and realize that this is just a short-term thing. That is my thoughts on the matter. But like I said, there are a lot of people who don't agree with that. Like I said, Ansem saying, doesn't matter what the decision is going to be, even if it's 50 base points, which, I mean, probability is quite low, right? But even if there's 0, which I think is also quite low, he seems to have the same sentiments, which is quite interesting to say the least. Let's quickly change this around. There we go. All right, but now, am I shorting it or am I doing anything along that field? Honestly, no. I feel as if the risk reward here doesn't make too much sense. And wait, I'll quickly pull up the full post here. Actually, this is kind of funny. Also, Twitter people are asking if he's freaking sidelined, because why is all this bearish talk coming around all of a sudden? Not just talking about the FOMC decision, but talking about the full week and the full month. I don't know, but let's quickly get a little poll going, all right? The chat this time, I can't take you guys out to show in the screen, but there was a way to show the chat. Let me find it real quick. Show comments, here we go. I think that's it, right? Let's see. Can you guys type something real quick so we can see perhaps the chat? Type something. Hey, just type. But wait, where are you guys watching from? Let's see. Because the chat normally puts the messages in, but maybe once people start writing some. Let's see. There we go. There we go. You see, okay, it works. All right. There we go. This makes things easy. So we got Slovenia, South Africa, Canada, California, Kentucky, Limburg, Norway, Finland, Portugal, New York, Scotland. I thought it was Scottsdale. London, Greece, UK, Netherlands. We got everything today again, huh? That's nice. Numbers says he isn't cutting. The whales would know already. So I think the probability of no rate cuts at all is very, very small. We can see what the probability is at right now. But, I mean, so what do you guys think? Do you guys think there's a percentage chance that they're not going to cut rates at all? Like that would... that would be quite detrimental for our coins right now. I'm not going to lie. Like, if it turns out they're not cutting it at all. Shush. Oh, I don't even know what to tell you then. Let's see here. What else I got in terms of sources? So we got this one to showcase. Let me quickly change this up. Let me put this one here. There we go. So I can now put... Oh, this is so... Okay, this is easy. Okay, I'm learning the new streaming platform, ladies and gents. So, then I press this. There we go. So right now, we also have ourselves a little CNBC update. U.S. Fed FOMC meeting live updates. Dow, S&P, NASDAQ mixed as Wall Street braces for Fed rate cut decision. So what's the thoughts here? In less than an hour, Jerome Powell's Federal Reserve is set to unveil its highly anticipated monetary policy decision on Wednesday, with widespread expectations pointing to the American Central Bank's first interest rate cut of this year. The move comes amid signs of a cooling labor market, persistent inflationary pressures, and mounting political pressure from U.S. President Donald Trump. So, as it currently stands, inflation remains stubbornly above the Fed's 2% target, and inflation risks could increase if ongoing tariffs continue to drive up consumer prices, complicating the Fed's policy decision. Looking ahead, Jerome Powell's term as Federal Reserve Chair is set to expire within a few months, and Trump is definitely trying to push him out as well. Here's the most recent update. U.S. FOMC meeting live updates explained what the Federal Reserve's plot tells us about interest rates. We could take a look at that, if necessary. But for the most part, it seems as if a rate cut is going to be coming. But the question more so is it going to be 0.25 or 0.5? Realistically, I think it's going to be 0.25. But, sometimes things happen. Sometimes things happen. And it would be a very funny situation if all of a sudden it's just something ridiculous. Imagine 0.70. No. But realistically, 0.5. Regardless, still bullish situation. Hey, little side note. There is something interesting happening right now. And I'm not sure if y'all are noticing this as well, but we've got ourselves Eric Trump. We all know who he is. You know how he's actually way more intertwined in the crypto space than some of y'all realize? And I want for some of y'all to just think for a second just how bullish the Trumps are on these crypto coins. And if you're wondering like, oh, is this not the peak? Is it not going to come crumbling down? I still think that with them opening the company on NASDAQ just now, Eric Trump, I forgot what the name was, ABC Bitcoin or something like that, or ABC Miners or whatever, something like that. With them opening this now and him having all these statements of crypto is the perfect opportunity, the best asset ever. I think he also said something along those lines. Let me quickly find. I think I must have it open. Here we go. He said Bitcoin is the greatest asset of our time. He's now saying crypto is a perfect hedge to real estate. I don't know. I feel as if we should not go against the freaking Trumps when they, at this point, have positioned themselves pretty much so for making billions upon billions of dollars if this crypto space does well over the next few months. And it doesn't have to be a long time. But I still think if it were to go to zero now, that would be the most detrimental thing to the U.S. The U.S. wants to be the leader of all this technology, wants to be the center of it all. And the year that they embrace it, it goes down by 80% or something like that. I don't know. I feel as if it could be a coordinated move by like China or Russia to make that happen, which would be incredibly funny. Not for our coins, but for how the U.S. would look. But I still think from the U.S.'s side, they're doing everything in their power to make it thrive right now, partially because of that respect thing, like all the other countries will look at them, and partially because otherwise the Trumps lose a lot of money. Ooh, that would be funny. Anyway, so yeah, Mark says, Dusty, I should need proper analysis today. My analyst will come in a bit to give y'all his thoughts on the price. Of course, at the end of the day, nothing is financial advice. You never know what happens with an FOMC. It's just you're basing everything up on probabilities, and there's a good chance certain things will happen, so we base it on that. But even if we get a 25 base point rate cut, there's a probability, there's a good chance that we actually just go absolutely bonkers upwards, meaning that we actually pump like crazy, even though it is expected that it's already been priced in. But you never know, right? At the end of the day, the event is quite bullish. So to some extent, it wouldn't necessarily be that stupid if the market were to go. It says connection is unstable. Wait, let me cook something up here. Let me also close a window. All right. Oh, that should be fine. That should be fine. There we go. Locked on in. Okay. There we go. Welcome to Guessathon. Yeah, there we go. So the reason I do not call it Guessathon necessarily is because there are some days in crypto where it's way harder than others. Like right now, what is the most logical outlook is everybody was expecting 25% rate cuts, right? Or 0.25. So let's say 25 base points. That's expected. Everybody was buying with the idea that this was going to happen. It's very logical if people buy the rumor, sell the news, but theoretically speaking, that cut together with gold increasing like crazy right now are from almost any angle super, super bullish for our markets. And so we're seeing it as a temporary thing, if at all. The reason I said a few days ago, sell now to hopefully buy back cheaper. First of all, you could have already bought back pretty cheap. Right now, we're already down a few percent on many of the coins. But that's not because I expect a massive crash of sorts. It's not like I'm on Ansem's camp here by saying, I like this the Sopranos little thing right here. It's from Sopranos, no? But I like the thought process there. But let me quickly grab this here on the side. Let me quickly grab this. I really want to share what I'm seeing in the chat right now, but I can't share it. But just know there's something funny that is in a different chat, and I cannot showcase it, but I really want to. Anyway, somebody says your camera quality is kind of bad. Let me see what's up. Is the quality of the camera bad right now? Let me check. Let me take a look. Can somebody confirm or deny? How's the camera looking, boys? It's good now. I don't know how to change it then. If it's not nice, then brother. Ooh, wait a minute. Also, yeah, if you're wondering why I'm sometimes clicking some random ass things, I'm still trying to figure out some of these parts, all right? Like, for example, I've been playing around with this a little bit. Trying to make, Yeah, you guys can't even see how much clicking and dibbling, dabbling I'm doing. It's good enough. All right, fair. So, regardless, let's go back to this screen right here. What is interesting as well in the markets right now is Pump Fund. Any of you guys holding Pump Fund at all? It's been an interesting endeavor, ladies and gents. As it currently stands, Pump Fund is the most hyped up project besides Solana itself in the market, mostly because of all these streamer coins and things of that nature. I shared a post a little bit ago that I thought was really quite funny. I'm not sure if I've still got it saved up somewhere here. Here we go. This situation was ridiculously funny to me. Stocks all-time high, gold all-time high, real estate all-time high, crypto. And then there's a guy drinking piss for schmeckles. I don't know. I thought it was kind of ironical. Here, 𝗫𝗫𝗀𝗃 explains how this cycle has been full of obviously winning trades. This is also what I've been saying for quite a long time. I'm going to say the last couple of weeks when it comes to the current crypto market. And the basic thesis there being things like Pump Fund, Solana, Chainlink, Dogecoin, a couple of those coins really, but mostly Solana and ETH actually have been some of the easiest trades over the past, let's call it weeks. And a lot of people for some reason like to skip out on money because either it's not enough for them. They don't want Solana to go from 180 to 240. They want Solana to go from 240 to 4,000 or whatever. They're not happy with, like, for example, 30% gain. But that's, again, a money management skill for the most part, because even that small of a move, right, the amount of dollars you can make on that is absolutely insane if you just take advantage of them. And that's what I recently showed you when I opened one of my most recent bots. I'm not sure if I have it open still. Let me quickly see if I do. I think I do here. So one of the most recent bots I opened, if we go to our main bot stack here, I think it's, well, let's go for the coin bot, actually. Here we go. If we look in this, we can see the Solana bot right here, the 350 Sol I put in. The reason I did this, by the way, the reason I opened this bot, even though it was like mostly at 230 something, 235-ish, the main reason, as I said, Solana, as it currently stands at 234, whatever, it's basically at the DAT price where all these digital asset treasury companies are going absolutely crazy on it. I think from almost any risk-reward ratio, it makes sense to go a bit crazy on it, to try and buy in as well, together with them, basically. Because if they're buying at these prices, it's probably a pretty okay price. And thus far, like the last couple of weeks, that's been the easiest thing to do. If they're announcing they're going to be buying billions, just buy it when they do or before they do. You guys are saying XRP is pumping. I've I've seen better pumps. But then again, and this is a counter that maybe some people will not like to hear, but you could have bought XRP below $3 again a few days ago here. Even perhaps today, maybe. Let's see what the lowest point was. I mean, somewhere throughout the day, maybe it went below $3 as well. At least it went to 3,001. And as I always say, this is not a pump. I wouldn't consider this a pump, ladies and gents. Like, let's be realistic here. It's up 3% from the bottom. Like, I know we've not been volatile the past couple of weeks, and so any 5% move is making us feel like a world of change. But, you know, this I consider the pump, this 18% move upwards. To go from 270 to 320. This is a good move, especially for our bots. But this, brothers and sisters, I like to sometimes stretch it a little bit by calling some small moves a pump, but this ain't it. Now, again, doesn't mean you can't make a lot of money off of a move like this, but let's not go saying this is a pump. I like some of y'all. Now, because of this system, y'all can't escape, right? I can grab you right there. But it's actually just one person who said XRP is pump, but it seems. Jason says it's not your usual quality for the camera. It's because I'm using a different stream platform this time around, and I thought I'd give it a try, but maybe it's not as good. Well, then we shall see. He's not right, though, from the angle that if we're looking at XRP on like a few minute scale, we are doing good. Perhaps going into FOMC, it will stay that way. We did get rejected a while back here at 305. The 305, the most crucial level for XRP, it seems always. Let's see. Hey, what do you guys think? You think 25 or 50 base point rate cut is going to happen? What do y'all think? Mitchell says 25 most likely, 50 a surprise. Either way, we're going up, up, up. Again, if it's 25, though, there is still a chance that since everybody was expecting it, that the market's going to not do as good on the short term. What do y'all think? XRP Haas says 25 praying for 50. I feel that. I feel that thought process. Let me quickly show you all this video though. Can I? Oh no, I had to figure out a way to get you the sound. I remember that was an issue last time too. I need to do that ASAP though, because otherwise I cannot get you sound when thingy starts to speak. So this is a very important thing right now, which I'll be looking up on the side. Let me see. Is there an easy way to click it? Anyway, I'll figure that out as we go along. XRP me says, seems like we always get a dip regardless of the news. Well, there's some interesting thoughts on that. So I'll keep this open for later if I do manage to figure out the sound. Let's quickly go back. There was some people who looked at the history of all this. Actually, quite interesting. Somebody just opened an $81 million Bitcoin long just ahead of the Fed meeting with 40x leverage. That is some insane numbers right there. Who would do such a thing? 115.5K though. So he has actually got a really pretty good entry, 115.5 right now, 115.9. And that's the thing as well. If you're playing with this type of size, you do make a lot of good money. I mean, 81 million is not that crazy, but in that sense, for the trades we've seen recently, right? But it's still a lot of good money, even if the price only pumps like $500. Here we go. So this is the one I wanted to show y'all. This is interesting. The SPX returns over the past 55 years when the FOMC cut interest rates for the first time after not changing rates for more than 6 months. Earlier data is approximated. Here's the averages and medians. So over the mean, now I guess let's go for median actually. I think in this case it's more interesting. Median over the next 5 days, right? Let's quickly see if this is correct. This is after a pause, they cut the rates. So the returns are stacked in front of us right here. We can first take a look at the data on its own. So, it's actually really interesting when you think of how these prices have also changed, man. Just if you just consistently bought the S&P, for example, or really almost any index for that matter, it's really quite interesting to think of how much things have changed over the past few decades. But that's besides the point. Let's quickly take a look at the numbers. So, on average, this is not real average, but median, which I think is more interesting at this point. I mean, it's not that many data points. Both of them are fine because they both showcase the first few days could be a little bit negative or not that interesting. But if we take a look at it from the next few weeks or months perspective, it tends to be very, very good. And that's, again, the kicker I like to always bring up right here, that on the short term, we may not have the most beautiful at times, right? But over the medium term, the longer term, I don't think it's easy to fail. Short term, 5 to 30 days, tilted slightly positive but choppy. Early 80s recessions dragged the mean. 60 to 90 days, medians are clearly positive, but averages pulled down by 1980, 81, and 2001, 2007. 1 year, soft landing pauses, 1980, strong double-digit gains, recession pauses, deep short-term drawdowns with only 1980 bouncing, plus 20% at 1 year due to inflation whipsaw. And Bliff the Bear says this time is different, huh? So let's see, the last few times after 90 days. I don't know. I'm not so sure if you can actually draw some beautiful line out of this, because I guess it's going to depend on all the data around it. Because you have had a minus 26.5 as well, sneakily in there, and a minus 21 even in 2007. And in hindsight, it's easier to look at those times and think, oh, that was, for example, the dot-com bubble, or this comes around the bigger recession. So Crypto 𝗷𝗀𝗀𝗀 says 2001 and 2007 were generational black swans. Those don't count. And the reason I, to some extent, think they might count for some reason is because, the black swan event or something of that sort, you sometimes don't see straight as it's happening, but you only see it going backwards, right? Looking back at it. That is actually an interesting take on this. Nick says, Dusty, but big up from UK. What's up? What's up? Spencer says, what do you do, Dusty? What's up? What's up, Spencer? Orlando says, they're going to scam dump. When it comes to the FOMC, I'm telling y'all right now, it is always a fun event to watch. At the same time, by the way, I'm trying to figure out how to get the sound. Let me actually quickly type it in now. Matter of fact, whilst we're doing this, I'm going to have to watch perhaps a tutorial just to get the sound in here. Okay. Speed running this. To share sound, share a tab or screen instead. All right, fair enough. I might have to share my screen then. All right. Let me see if I were to do that, which is not that much more difficult, actually. Let me see how that would look. Let's see. Oh, what if I FOMC? Here we go. What if I just do this tab? Okay, let me see if this works. Going to quickly stop sharing the screen to try and share the screen again. Okay, so this should make it work. Let's see if I press this now. Just a quick test. Can you all hear this sound? I don't want to play it because I don't know if it's copyrighted or what, but all right, perfect. Fixed it. Easy, easy, boys, easy. All right. All right, so I'll get that sorted in just a sec. That should be fine. All right, cool. Then let me again go back for now to guess I can share this right here. Do this. Here we go. Boom. All right, we're locked in for the meeting in just a little bit. I think everything should be perfect now. I just wanted to make sure we were prepared for in case the market does something crazy, you know what I mean? Like, I don't want to be stuck there all of a sudden in 30 minutes from now, whatever. Be like, oh, yep, can't do anything. So there's two major things. One is, of course, the event itself, the dates come. Oh, sorry, the numbers coming out, and then we have ourselves the meeting where they're actually going to start speaking, and they're both quite relevant. But I'm going to text my analyst now if he's ready to give some thoughts, because if we're going to get the numbers in like 50 minutes from now, it would be nice if he can give y'all his thoughts now. So let me quickly see if he is. All right, I think that should be good then. All right, I'm gonna add you. Let's see, add to stage. Yo.
Hello. Can you hear me?
Yep, can hear you perfectly fine. I think they can hear you too.
All right, perfect.
Can I share your screen? Just let me know.
Yeah, I'm good to go. First and foremost, good evening, everybody. So I hope we're all prepared for the meeting. So
let me quickly ask them. Is the microphone, is the sound good? You guys can hear it all perfect? Again, guys, this is a work in progress, all right? I'm trying to make the streams more interesting, but I still got to piece by piece it out, if you know what I mean. TJ says, do I see a kiddie pool in the back? Let's not talk about that again. W says, ready to rock. If y'all want the sound louder or something like that, or quieter, just let us know. And again, for all of you that are not sure, Specialist, the man we've got in front of us here, one of the best traders I know, perhaps the best one, but regardless, he's going to give us his thoughts on the current market. He's always doing the posts over on X when it comes to what we think of the crypto market. And if you have any requests, you can always just let him know. But anyway, I'll let you take the stage. Do your thing, boss.
All right, thank you for that introduction. So FOMC, it's probably going to be one of the most important ones out there, probably of this year. As we've already heard from Dusty and a lot of experts as well, I think the probability is something like 90% that it's just going to be cut by 25 base points. But even if it gets cut by 25 points, it's still unclear where we're heading. Why? Because mostly what people are doing, they're actually focusing on the tone of Powell, because most of the time it all depends if he sounds rather hawkish or dovish. And what do I mean with that? So basically, let's give an example. If he signals more cuts are likely in order to, for example, stresses risk to growth or downplays inflation, it's a more easing ahead. He's going to give us a more broad perspective, then that sounds more dovish. But if he's going to sound more hawkish, for example, it's like a mid-cycle adjustment, then we could actually see the dollar rise. And technically speaking, when the dollar becomes stronger, what we have seen from a broader trend is that crypto usually goes down if that happens. But again, it all sounds how Powell is going to bring us the news.
So somebody's asking if you're AI, by the way.
That's actually quite interesting. I've never heard that one before.
Let's see.
What do I have to say to make sure I'm not AI?
I don't know. You can never prove you're not AI. I think. I think nowadays
they can't see my face, so at the end of the day, I can be a very.
Maybe you just gotta say something very racist that ChatGPT couldn't say. No, I'm joking.
I'm not sure about that one, Chief. Anyway. So let's dive into the chart. So let's start off with Bitcoin, and this is purely, a technical overview. I did it in the last live stream as well. Actually, let's start off with XRP, because I know you guys are a lot more enthusiastic when it comes to XRP, and counts the same for me. So what happened? So around the 13th, we've hit this level required to break to consider bullish takeover. What do we mean with that? From a technical perspective, we've been making these higher lows. I'll just show you guys here. Very clean, and very clean right over here. So what actually happened? We had a change of structure. So this is the last low we made. And the last low we made, this is the high of the last higher low that we made. And we basically broke that level, which is a really bullish sign, especially considering with the Elliott wave count that we've also had. So let me just zoom out for you guys so you can see it a lot better. So all in all, the most impulsive wave that we've had was wave 3. Elliott wave usually consists of 5 waves, where wave 1, 3, and 5 are the impulsive waves. So in this case, the bullish impulsive waves, and the even numbers are the corrections. So that is 2 and 4. So the way I count it is the following. We have the first impulse, correction, and then this massive impulse right here is the wave 3, correction, impulse. And actually now we have wave 3, wave 4, and then the final wave 5 has yet to be finished. So according to our count, we're actually quite bullish, and we've discussed this in the previous stream as well, that we're still eyeing that $4.62 area. However, it all depends on how Powell is going to bring the presumed rate cuts of 25 base points. So it all depends on that. But to zoom in on where we are right now, because I don't want to talk a lot, because we're almost heading into the meeting itself, not the press conference.
But I don't know what these people are doing. I don't know what's wrong with them, with these comments. Get down! Somebody says, sounds a little like Arnold. Let him say, hasta la vista, baby.
Hasta la vista, baby. Get to the chopper.
Get to the chopper.
While I'm talking, I can't really look at the comments, so please enlighten me with the memes here and there people are throwing around in the comments. Love
yes, everybody's saying, get to the chopper now.
Yeah. But serious face, guys. We can do this later. So right now, in the previous stream as well, so my ideal entry, what I'm actually looking for myself, is that we've hit this bullish takeover zone, and then what I actually said to you guys as well, the best case scenario is we pull back to the 200 EMA, and this is all on the 4-hour time frame, by the way, and that is exactly what we did. And we I think the last stream was around the 13th or the 12th, I'm not sure. So that is where we are right now. So that's the best case scenario. Yes, could you have bought actually below $3, like Dusty said? Absolutely. And that's absolutely fine if you're still looking at XRP from a long-term perspective, which is still, it has massive potential, and it will certainly grow. But if you're more short-term and that type of trader who loves to use leverage, more gains, juicy gains, then I would still be more careful. What I would personally do is look for buys when price crosses through here, because then it is clear, okay, we have tested the 200 EMA, because we still broke out of this. We tested it and we continue upwards. So that is the best case scenario I would give for you guys. So could you possibly put a limit order here? Yes, you could. However, I would manually initiate the trade. That's my suggestion for you guys. Why? Because when the meeting starts and everything starts, you're going to see a lot of chaotic price action. So if you have some kind of wick or something that triggers your trade and then immediately bearish movement downwards, well, then you have a peculiar situation going on. So I would just wait, look with your own eyes, and see, do we confidently break this and stay here for a couple of minutes? Is price going to continue? That would be the best case scenario. So I am still eyeing this Actually, let me change perspective right here. Just remove this. I think you guys get the message. Around $4.62. But again, it all depends on Powell at this moment because technical analysis goes only so far. So yeah, that's the. I think we have a couple of minutes before it starts.
Yeah,
We can
so 3 minutes before the numbers come out, and then 30
yeah,
minutes before the stream.
exactly. The press conference, you mean?
Yep.
Yeah. So let me just grab a Bitcoin as well. So yeah,
So what do you
actually,
think
let
of
me
my
grab
thoughts?
Ethereum because it gives a different perspective.
And what do you
Because
think of the? I'm not sure if you can hear me, but what do you think of the general situation? You think 25 base points is most likely, right?
I think it's most likely. I think it's a roughly 10% chance that we can do like. Let me say it like this. I think it's an 80% chance that we're going to do 25 base points. Yeah.
Mhm.
I think it's around 10% that it's going to be 50, and then another 10% that it's going to be 0. And like you said, if we have 0, well, things are not going to go our way for the time being. Of course, on the
Mhm.
long term, we don't have to worry. But yeah, that would be my outlook on the entire situation.
It
Yeah.
is going to be funny. I mean, we have a little bit over a minute left
Yes.
until number.
Yes.
I wonder actually also what is the absolute fastest spot where you can find them. I have a few Twitter accounts open now. I have Zero Hedge. I have a few guys, but I wonder which of these accounts is the number one officially. I don't know. Like
It all
let's
depends,
see.
really. I think any live stream from CNBC and stuff
Yeah,
should be
probably. I
good as
thought maybe
well.
like Bloomberg Terminal or some
Bloomberg,
stupid thing.
something like that. Yeah,
Let's see.
would be the best thing.
And I guess we'll see. Shall see. But even then, even if I'm looking at CNBC, I guess were they just screaming out loud or let's see. So Rex says, "Look at XRP. Is it doing anything? Probably not. I mean, people keep saying this, but can you check for 1 second if XRP is doing something?
Well, we're seeing some movement, so it's a couple. Let's just grab the M15. We're seeing some movement, but it's still not that significant. It's just people gambling at this point or insider traders, who knows? But I assume it's just people taking one side of the market. Of course, you can do it, but again, it's more risky.
Do you have any words you want to say just before the meeting itself? Or sorry, just before the numbers come out in about 40 seconds?
We have around 30 seconds. Indeed. Guys, please adjust your positions accordingly. Don't over leverage right now. Just wait. You can always open a position after the rates come out and price goes up. Don't fear the FOMO. There is enough opportunity to get juicy gains in. Don't get the better of yourself, and yeah, buckle up, I would say, because we have around 10 seconds. I'll just keep the XRP chart open for you guys, and let's see what the magic is gonna. And we're actually going down as of now. Let's just grab the 1 hour. We have a wick already.
Nobody's posted yet. Still waiting. FOMC, CNBC refresh. Economic data.
Should grab the M50.
So yeah, 4.25.
4.25. So
4.25. So 0.25. There we go. Wow. So it's actually interesting. The fastest is trading economics then, huh?
It's quite interesting. Let's check out some others. ETH is moving.
I'm gonna steal your screen for just a second. I don't think we can do both of them. So the data just came out. This is the one I'm updating myself with, economic or trading economics, the one I always use. And it's not everywhere, but here sometimes it refreshes through. Let's quickly see it again. If I just quickly refresh, it should update itself. Here we go. You can see 4.25, so it's locked in. And well, I'm not gonna lie, the market didn't have as heavy a reaction. I mean, if you really start breaking it down like a 1 minute frame, it's been some chaos. It's been some back and forth already. Let's see here, about a 1%, and it's already moving 1% by the minute. And if y'all are not understanding, this is not necessarily a lot of money, but particularly for Bitcoin, it's some of the craziest volatility we've seen in a long time. And you got to understand that the meeting, or I'm gonna say the The talk itself only starts in half an hour. From now, for the next, I'm going to say 40 minutes, maybe 1 hour, this is where anything can really happen. And sometimes over the next few minutes, you see the price trend down by a couple $1,000s before moving up a couple thousand. Sometimes it's mostly like this, but significantly, or how do you call it? Like more significant price movements. I'm going to tell you right now. Hey, by the way, any single person that's watching right here, if you've not pressed that like button just quite yet, right now is your best time to do so. We have about 650 people watching, but we only got 130 likes. So make sure you press that like button right now if you haven't done it yet, because in a few minutes, the meeting will start, and we're going to be watching it live all the way, of course, and give our interpretations. I mean, do I expect anything crazy to be said? Well, think about this. This is the first time somebody says talk in the mic. Brother, I think the mic should be fine. No? Is it really that quiet? I can put it up so much more, but then people start screaming that it's too loud. How do you hear the mic? Is it loud? Is it fine, or is it whack? I mean, I can turn it up, but last time people were not happy with me breaking some headphones.
I think it should be good. It's fine.
Yeah, I want to do like a test right now, scream, but
No, please don't do that. Don't do that.
It was quiet, now good.
Yeah.
I mean, I can also just talk exactly like this if y'all would prefer. Regardless, I'll get back to the situation. This is obviously the first time we've got the rate.
Too loud.
Too loud? All right. All right, fair enough. This is the first time we got the rate cut in, a pretty long time. Market, by the way, moving pretty significantly still. You got to understand that this sets a new precedent for the next couple of months. I mean, going from 4.5 to 4.25 might not sound like that big a deal, but obviously, as we covered it, I keep showing that scene, huh? What was it now? Here we go. I mean, thus far, most times, pretty quickly afterwards, you have some very significant moves. At least this is for SPX. But we do expect the same to happen for the crypto market. Actually, we're moving back upwards. Okay. I'm just watching this on the 1 minute. I mean, we still got about 20-something minutes to fill, though, before Jerome Powell is going to speak. And like I said, look at this. It's been a long time since the interest rate had moved. It's been a long-ass time. And it was due. But, it was 0.25 for all of y'all that were wondering. No, it's not 0.25 up. Somebody says 0.25 down. Of course. What other way could have happened, huh? Regardless, you can take over. You had some thoughts about Ethereum, you said, right? I'll let you get back to it, my brother.
Yeah, so as we've been speaking, it was around 80% probability that it's went down like this, so that is nothing unexpected. But now the fun comes, because how he is gonna justify the change in base points, that depends. I think then we're gonna see the real action. At least the real action. I think we're gonna see more action from the actual conference he gives than what we've been seeing now, because I am genuinely surprised as well, and I think a lot of people are. Well, in a way, I think it's certainly positive, because I think everybody is still sitting on their piles of cash. For the ones who are over leveraged right now and were crazy gambling, I think, well, you live to fight another day at this point. But please be cautious of the news conference in around 25 minutes, yeah? Because the way he brings it, the justification why he done it, that's a very, very important thing. Because as I've said earlier, if he brings it in a hawkish way, then that's less beneficial for us. If he brings it in a more dovish way, in a more soft way, why he did it, and he downplays inflation and stuff, then that's actually a positive thing for us as of now. But that's just speculation. Actually, in the first few seconds when he says, like, he greets everybody, you can already read his emotions, and then the market is already going to start moving. It's actually pretty funny. So I guess we'll open the live stream when he starts talking. But until then, we can just wait, and I think a lot of us can relax at this point, because I think a lot of people expected crazy volatility and just wicks here and there, etc. But for now, it's pretty calm, which is still a good thing. A more readable market, in my perspective, my perception, is better than this crazy volatility that just bounces up, down, which confuses a lot of people. So I would say for now, just wait for the conference, how he brings the news. Let's say even then, if price doesn't really move after the conference, I would say for the crypto market, it's still a win. Because if you think about it, let's say he did something crazy and price just dumps and we go down 10% or 15%, I think a lot of people would be quite angry, rightly so. So if price just stays around the same, I think we can say that's a victory for crypto and for all of the coins everyone is holding. So that's my thoughts right as of now. For the rest, yeah, you can see we can go to the M15. Dusty pretty much already showed it. It's just not a lot of movement, to be fair, just a couple of wicks. So we will await the conference.
I expected it to be crazier, indeed.
Yeah, same for me. I'm genuinely surprised, but again, the probability of him changing the rates to, it was already like pretty high, so it wasn't something quite unexpected.
I expected the result. Because now, it is still volatile. We are sometimes understating it. The fact that we went down and up and down 1% every minute, it is for Bitcoin is quite a significant thing. But I just expected the market to move downwards a little bit more significantly on the news because everybody knew this was most likely going to happen. But still, I guess at that point you can get back to our earlier statements of this buy the rumor, sell the news thing. It's such a strange phenomenon because the rate cut itself is such a bullish event that you'd expect everybody to still buy into it because it's never a certainty. But if it's almost certain, like it was right now, then anybody could just buy in beforehand, right? But then again, you still want that certainty. And so we're in the middle ground right now where the market did a little bit of a twirly derp, a little bit of, it's basically going sideways, maybe because the indecisiveness. Because we're not sure if up or down is more logical here. Both of them make a lot of sense, which I guess turned out to be sideways movement. Anyway, which chart are you looking at right now? What do we got in front of us?
Now we're just going to look at ETH. We're all resting on the 200 EMA mostly. Just Bitcoin has some catching up to do. Bitcoin is actually the most bullish, I would say, because we still haven't pulled back to the 200 EMA. It just keeps going on. But then again, this is the current range that we're in. And I still expect that tonight, deeper into the night, or actually after the conference, the minimum thing that we're going to see is we're going to see price move out of this range that we're in, either upwards or either downwards. But even if we go downwards, it's no big deal because Bitcoin still has to pull back to the 200 EMA and test it. But again, this sideways price action and just goes on and on and on and on and on, and then this little fake out over here, it's just completely normal price action at this point. And also for Bitcoin, we've hit the structural change that we could consider that we are going bullish, so everything is going fine for now. The only thing that I wanted to show you guys, which is still worrying and which I shown in the charts on X, where I post my analysis, and on Discord, is if we take the 2-day time frame for ETH, especially because it's quite visible on ETH, the resistance zone where we are resting right now is the all-time high, and we have pulled back a little bit, but we're still pretty bullish inside this resistance zone. That's why we've been going sideways, because we are in this massive resistance. But technically speaking, from a logical, structural perspective, if price is in a resistance zone, I've been going up, at one point, price is gonna overextend and pull back to nearest support. However, nearest support is around 3.9K ETH. And we still haven't hit that. So that is the thing where I'm still a little bit skeptical about when it comes to ETH, especially. Can we hit that tonight? I don't think so, because that would be a big, massive drop of around, 10%. But we could certainly see this level before we go any higher, specifically on ETH. But then again, I know some of you guys are thinking, well, Mr. Analyst, Mr. Marcus, where most of the cryptos move together, such as ETH and Bitcoin. So then these coins would go down as well. That is entirely true, and that is why ETH can be uh, well uh, a pair that is gonna set the standard for the other cryptos, that we can pull back first before we go any higher. But again, it's just speculation at this point. First, we wanna look at the conference, and then we can check how price is going. Because if price is really bullish, you don't really have to pull back to support. And we are still very bullish if you just zoom out here. It's just small correction and we're going up, small correction, up, small correction. So technically speaking, if you look at the trend, we can still go up a lot before pulling back. So we'll see, but it's just something to consider for you guys because it's all about probability. How is XRP doing right now?
Marcus and Nader, AI bro Marcus.
AI bro Marcus.
I love this though. I do wonder, does it really sound like the Terminator or something like that? To me, it doesn't sound like it, but maybe.
Me, absolutely not. I heard it back today, but I don't know. What are some more lines of Arnold Schwarzenegger? Get to the chopper and then what more?
Say it again, please.
Go to the chopper.
You do say it very well. I mean, I must say, it is pretty accurate. I don't know. Get down. I don't know.
I don't know about that one. Sounds like Barry White. Oh my. Well, I can say I don't have the weight like Barry White, but
what does Barry White look like?
You don't know who Barry White is? Dusty, are you for real?
No, I mean like fatness. You say I don't have the weight, but he is.
That's actually disgusting that you don't know Barry White.
He's a big fellow. You're right.
Yeah, he's a big boy.
That's kind of completely contradictory to Mr. Schwarzenegger.
Yeah. Well, they're both big, but just in a different way.
Fair enough. He doesn't even have to try. All right, you should. I guess you're Mr. Terminator from now. Maybe you should try changing the name. Okay, the Bitcoin is falling down a little bit though. We've gone from 116.2 to about 115.4 as it currently. And somebody was asking, will it be even more volatile than what just happened? My simplest response would be, we can pretty quickly, in about 15 minutes from now, see some real volatility. Fun fact, by the way, I'm not sure if y'all know this, but do you know that you can actually also speculate on the first words that Mr. Powell says? That's a really funny thing. He always starts with like, what does he start with? Like, what? Hello, ladies and gentlemen.
What? Something like good evening, everybody. I don't recall, but that's actually the part where a lot of people decide, okay, is he saying it in like a positive way, or is he like very depressed sounding? Then people speculate on that as well. So
yeah, actually, good afternoon. He starts.
Good afternoon. Yes.
Let me see. Let me see Polymarket now. Let me see what the words are that you can go for. So let's see, Powell. Okay, it says, what will Powell say? Inflation 40 plus times. These are the things we can go for. My ears. Inflation 40 plus times. I'm not sure if I can show the platform. I'm not sure if I can show Polymarket, so I won't. So I won't do that. But let me just say it out loud then, because these are kind of funny. There's one that says inflation 40 plus times. There's one that says inflation 50 plus times, 60 plus times, goal 15 plus times, tariffs anchored 3 plus times, unemployment/employment 20 plus times, good afternoon, probability, pandemic, median, Trump, recession. Recession is only a 50%. That's interesting. Comment, downbeat, and AI/artificial intelligence. So you can basically go for any of these. And I find the fact that recession is only at 50% is quite interesting, because you think that's a pretty easy one. Like the probability of him saying that's pretty high. Good afternoon is at 97% though. So if you don't, it's 98 now. If you think that he's not going to say good afternoon, what else is he going to say? Sometimes he says something else, but I don't even remember the other thing that he can say. Maybe he sometimes just starts straight up with the news. But I mean, it's at 98%, so I wouldn't go against that one. I mean, maybe it's a nice hedge against your other positions, perhaps, but inflation 60 times. Does he really sometimes? What is the median amount of times he says inflation? Ooh, wait a minute. Are you open? Do you have the Bitcoin charts to open? Can you go to like 1 minute for a sec? On my chart here, we dipped all the way towards 114.8. So the volatility has been brought back, huh? What is the lowest that it went on your chart? I can't see the wick. Like I can't zoom in that far with my eyes.
It's like 1 point. Let me actually read it. 115,024.14. It's the lowest we went.
And we're recovering already. Interesting. Honda says, are you showing it on stream, Dusty? Of course we're going to show it. It's about 14 minutes left. And for everybody that's not pressed that like button yet, right now is your best time to do so. You've got absolutely nothing to lose. Also nothing to gain except for some cool points. It just makes you cooler, which is it's like currency amongst here, you know? Like, you gotta.
If we get 300 likes, we're going to do some Arnold lines, especially for you guys.
Oh, is there anybody from Austria here in the chat? Where you guys are watching from right now? Let's see what we got.
Yeah, we need an Austrian in here.
What?
We definitely need an Austrian. I agree.
Right? We need to be able to rate this for accuracy properly. Dominic says, "How do I join?" You mean, are you an Austrian? Are you Arnold? We at least have a Deutscher. We have Netherlands, Texas, India, Canada, Sydney. I know a very famous Austrian.
Oh, let's not get there, guys. Let's not get there.
Poland, Louisiana, Costa Rica, Netherlands, Norway. Okay, I guess we have everything. We have Chile even. Yorkshire. Cosmos says 65 more. Not sure exactly what you mean with that. Finland, New Jersey, Belgium, California. All right, we don't got. We got Morocco. Dominic says, yeah, bro, I want to get out of the hood. All right, brother. How do I join your community? There's a Discord link down below you can always get into. It's just completely free. Just join it. Start talking. All right? Join Discord if you haven't done it yet. It's completely free, and we share some cool thoughts in there, cool analysis. You don't want to miss out. You can also ask questions.
Yep. If you want to see the analysis, on a daily basis, I post them there, also on X. So if you guys want to discuss some trades and some thoughts on the trading ideas, just hit me up in Discord and we can have a discussion. It's all good.
Let's see. South Africa. Bangkok. All right.
That's a different Bangkok.
Drenthe. Confirmed 0.25 cut. Nice ISO Kef. We saw it about 19 minutes ago, but you're right. It's 25 base point cut. Alice says, it's 4 a.m. here. No sleep till crypto pumps.
That's right solid dedication.
Some people are just built different, huh? Like that person, he's built from a freaking different cloth. Or she. 4 a.m., no sleep until it pumps. Might take another, a week or whatever. Just watching the screen. No, never sleep again. Blazian says, look at what's happening DXY. Is there anything happening in particular?
That's actually quite interesting. Yeah, we might have made a new low because I was actually drawing it just like 10 minutes ago or something. So this is like the range structure. So we've actually made a new low. And I don't know if it's let's just remove this. I don't know what this gibberish is.
This gibberish.
Yeah. So yeah, it's actually last time we've been so low is actually in 2022, just before the start of the Ukraine war. Yeah.
Damn.
Yeah, that's crazy. Actually, it was like the start of the Ukrainian war, somewhere around here. That's crazy, yeah. But it's to be expected, to be fair, because the idea is that. Actually, we're actually continuing onwards because it was quite a drop, if we can see it here. But, this is actually good for crypto, if you guys can think about it, because everything is still correlated to the dollar. If the dollar is weak, crypto is going to be stronger. And I remember we had a very interesting chart where we put, just help me out here, Dusty, that we put Dixie next to Bitcoin and then the historical price.
Yeah.
The inverse.
Yeah, true. It's the funny thing that the correlation keeps going from almost perfectly, like I guess like up to 0.8 or something along those lines. It was the dollar with Bitcoin, and it basically showcased, at least to some extent. I'm gonna quickly remove you for a second and see. Oh wait, I don't have it. Maybe I have it on still. No, I don't. The only chart I have is this one right here. Proper chart of Bitcoin's longer term. But basically the chart I showcased in a video just a little bit ago was showcasing Bitcoin's movements with the dollar underneath it. And what was quite interesting was that I guess at a certain point, every single time the dollar went up a crazy amount or went down a crazy amount, Bitcoin did the exact opposite, but that it was so fluctuating. Meaning that at some point, it was almost perfect correlation, and then pretty quickly afterwards is almost a perfect inverse correlation, just a pretty interesting debacle. And I remember also, I see now somebody, by the way, I have three things to say. One is, I remember also thinking, imagine the dollar just having a meltdown, which it's partially having right now. All of our coins would look really, really good, but the euro people or the pound people, they would they would not necessarily be that happy. And that makes me think of Gideon here, Gideon. It says, sell order at XRP €2.72. And I'm like thinking in my head, I have no idea what XRP is like in euro. And I don't even know, like, I remember a while back where Bitcoin didn't even make a high yet in euro, only in dollars, because the dollar was so weak. And the third point I wanted to say was we have only 8 minutes left until Jerome Powell is going to speak. If you guys have questions for right now, make sure you ask him right freaking now, because in about 7 minutes, there's 30 minutes of staring at a screen with intelligence. I don't know how to call it the best way, like with just focus, we cannot deviate from the plan anymore in just a few minutes.
Deviate from the planet anymore. I'm gonna steal that from you, definitely.
It's Hakan says it's a nothing burger though. I mean, could be. You don't know until you see it. That's the thing. It's sometimes all of a sudden our coins do something really stupid, and sometimes it is indeed a little bit of a nothing burger. But you want to be prepared for anything, right? I mean, right now, if I'm looking at the market as well, it's not as hefty a move as some might have expected, sure. But ultimately, let's see. So from that pump that we saw around the FOMC, we went down roughly 1.23%. In this case here, from about 116.3 to about 114.8. 1,500. It's not that crazy indeed, especially from the fact that we're coming back up. How are altcoins doing though? Let's see here real quick. So that's Bitcoin, XRP. Pretty much the same thing. How much did it move in that minute? Let's see. XRP moved down about 2% or so in 1 minute. Pretty quickly bounced back about 2%, and then overall went down roughly 2.15%. And right now, slowly but surely coming up about 1% again. It's very funny that this is, in reality, actually quite volatile. It's just we've gotten used to these crypto markets being absolutely crazy, right? But in reality, like a 2% move in a minute, it's pretty hefty. And the nice thing also is the system of bots that I've always set up, like I told you guys. The nice thing is they actually trade a significant amount more based on volatility. They're basically volatility bots, meaning that right now, most likely we got a lot more trades than we usually do, especially if I start counting the minutes here, because it's able to buy on its way down. If you did not know, buy on its way down and then sell on the way up. And particularly the moves that we saw just now are very, very nice for these bots usually. So that is also something quite nice. If I look back, I think it will probably have made a lot more. So yeah, you can see how many it made around 8 o'clock this time here. Yeah. So that is actually something pretty freaking nice as well. Let me see. Is there a difference between these? Oh no. Okay, it's the same layout. I'm also trying to learn that. I can make you smaller as well.
I mean, you can make me smaller. That's fine.
No worries. But yeah, so we have about 5 minutes to go. Is there anything you still want to showcase to the peeps before that happens?
Well, not much, to be fair. I think we see still, price is still moving very, ranging way. There's, we can say it's a nothing burger, but, at the end of the day, are we gonna come here with nothing ever happens and then see a huge rise up? I don't want to be that guy. So I would say just be cautious until everything is clear and set. So again, even if price doesn't move either bearish or bullish, like I said, it's going to be a win for us. The markets is going to remain stable, and we're definitely going to see more bullish momentum after all of the storm has passed, I would say, in my humble opinion. And for all the nothing ever happens people out there, I think the dinosaurs, they said always for millions of years, nothing ever happens, until that meteor hits. So think about it.
Yeah, I mean, I mean, you got yourself a solid point. I don't think they were. I don't think they were thinking about it. Somebody's asking if you're on the pipe. I don't know exactly what that means. Actually, I'm not sure if that means. I'll act like that one was not said just now because I'm not 100%. Dominic says, I'm playing, guys. Let's pump. He says $100, 100x leverage. I like you, my friend. You're a risk taker. Degenerate for sure. He says, my $100 is going to be the lizard peoples. What? It's going to be the lizard peoples? Powell don't like Trump, so he's about to nail us. All right. All right.
It's a good point, actually, but I don't think he wants to ruin his entire career just to, F around with Trump.
He's going to finally show some balls, Let's see. 𝗕𝗘𝗪𝗧𝗬 says, I'm thinking 0.25 cut, no big deal, maybe a little pump, and then sell/profit take. I mean, we already got the result in, by the way, in case you were not aware. And in case you were wondering, the result, let me quickly remove this. There we go. The result has been a 0.25% rate cut. And if you're saying right now that you're expecting a little pump afterwards, thus far, you've not been correct. But I guess it's pretty much that we're back since where we started. We've got 2-3 more minutes left until Jerome Powell takes the stage. Yeah. I don't know. Sometimes this event is so fun to watch because you just see the prices go crazy. Sometimes it's not that deep. But for all of y'all that were not here just a few minutes ago, if y'all want the update, 25 base points, 0.25% going from 4.5 to 4.25 is exactly what happened. So, let's see. I think this is not live just quite yet. Let me give me 1 second. And by the way, for all of y'all, by the way, little side note for all of y'all watching right now, there's going to be a lot more trading videos, a lot more pretty interesting, I'm going to say, updates on a lot trading related. If you're interested in all that, just make sure you subscribe to the channel, of course. And if you're wondering what we're trading on, I've always got the links down below. The bots I'm doing over on Payonics, but the live trading, because we're going to do a lot more live trading, will most likely be over on Blowfin, which a link is down below as well. Don't worry if you don't want to make an account or you don't care for it none too much just quite yet. You'll see it, all right? It will pop up over on the channel over the next few days. But I just wanted to quickly get that out there. A lot of cool stuff is coming. You're going to see a lot more of Mr. Analyst here as well. And the nice thing is, some of the strategies have been pretty cool. And some of the trades we've talked about here have been pretty freaking accurate. So it's, it's kind of weird for me to speak on that when you're in the chat like that, by the way. the glazing comments, but it's been pretty freaking accurate.
A little glazing here and there, never hurt nobody. I'm also seeing somebody in the chat stream this on Pump Fun too, bro. Is that possible or?
Well, the problem is I have to make a token. So the nice thing about Pump Fun is there's there's a few positives. One is you could get direct fees.
Yeah.
And if they trade your token. And the second is it's just the hype right now. So it's perhaps a thing to get a new audience, especially like a more degen-y audience. The negative, by the way, I'm seeing you scrolling your screen. It's not being shared, by the way. I can share it, but we're going live in a few seconds here. Matter of fact, it's time, baby.
It's time indeed.
Let's see.
Put the sound on. Should be ready. There he goes.
Let's see. Wait, I hope there's sound. Uh-oh.
Oh, there's no sound.
100%. Easiest trade of a lifetime. All right. Wait, no sound?
There is no sound. No.
Oh! You guys said there was sound. Okay. Why did you not say that before?
I thought you heard me, but I was muted as well for some reason.
Ah!
Oof.
Activity in the housing sector remains weak.
Okay, let's be quiet.
In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Great. Thank you. 𝗓𝗂 𝗏𝗂𝗏 at Associated Press. As you know, Fed Governor Stephen Mayron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Well, and then just as a quick follow-up, I'm sorry, can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timmeros of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, you can I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite at equality. We don't need to know that. But we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted? And how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when we feel that policy is a place and needs to move quickly to a place. That's not at all.
It's not me. Or is it? I mean, otherwise the stream would be lagging, no? I mean, it's just the website?
No, I don't think it's you.
And see.
I mean, otherwise, is the stream lagging? No, so it's not me. Let me try to reopen it, but...
I think it's just too many visitors on the
And
website.
In place. I guess I'm just, trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP,
No, it's definitely them.
How can FOMC have issues then when it comes to a stream like this? Let me see if other people have issues with the stream.
Just try to refresh one more time.
Yeah, I think I'll refresh.
Should be all right. He probably drank some adrenochrome before he slept on stage.
Oh, I'm seeing now. Wait, share screen. Give me a second.
if you look at the SEP,
well, every single time it goes back to this point, it cuts out.
actually,
3 months ago with
the projections for growth next actually ticked up just to
Every website I go to is playing the same exact clip.
Maybe I can try, because I think on my PC it's fine. Shall I share my screen?
Yeah, sure. I have a different one though. Wait, let me see. I have now one from this one.
Job creation, but it's just one of the things that suggests that the labor market is really cooling off, and that tells you that it's time to take that into account in our in our policy.
So just looking at the SEP once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
Like a follow-up, every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create, over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years. But the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Fun fact, their website is just half down. I'm trying it on every different device, different internets.
Thanks so much,
It's their
Elizabeth
website.
Schulze with
This is a
ABC
different
News.
streaming website.
The latest inflation
not
report
me.
shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that though, right? We have to. Our job is literally to make sure that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal? So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment, and the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. You know what, let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation, accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now. And people they're making their arguments, and we're having a great discussion around these challenging issues. So,
do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount, and I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded. And it's just really hard. You can't survey for that. You've got to have a model that predicts that. And it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month, and you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
But for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. It shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
We have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. Black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a 0.25 percentage point now is going to arrest that?
Well, I didn't say that I thought a 0.25 point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter. And I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that, you see minorities, unemployment going up, you see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So, that's how we see it.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I, of course, am not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve Federal Reserve System and at the board. Are they the right size? We're actually going through a 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
But not an independent review?
We're certainly open to to always trying to do better.
Mr. Chairman, Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess, but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college. And yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI more than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down. And so it's probably a number of things. But yeah, it's probably a factor. Hard to say how big it is.
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
Well, if you can take goods, just sort of the broad goods category, and last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was, goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation went very high, but we had essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, I mean, analysts have different views, but we think it's contributing, 0.3 or 0.4, something like that, to the current core PCE inflation reading, which is 2.9%. So it's contributing. What seems to be happening is that, the tariffs are mostly not being paid by exporters, mostly being paid by really the companies that sit between the exporter and the consumer. So if you buy something and you sell it through retail or you use it to make a product, you're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been pretty small. It's been slower and smaller than we thought. But the evidence is it's very clear that there's some pass-through.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in May.
I have nothing new on that for you today.
Hi, 𝗕𝗓𝗪𝗓 with Bloomberg News. I just wanted to follow up on one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of the forecasts that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
So there's 12 vote, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really. The only way for any voter to really move things around is to be incredibly persuasive, and the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters, and that's how it's going to work. And I think that is the way the institution, that's in the DNA of the institution. That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is, and what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
Claire Jones, Financial Times. Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you heard about, on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
So I think there's quite a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual historically unusual nature of the challenges that we face. But let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times. But from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment, which is those are our two equal goals. And you will see that there are a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.
Thank you. Archie Hall from The Economist. You mentioned earlier that job creation was running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
So there are many different ways to calculate it, and none of them is perfect. But it's clearly come way down. You could say it's somewhere between 0 and 50,000, and you'd be right or wrong. I mean, there's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly. And that's because a very lower amount of people are joining the labor force. The labor force really not growing much at this point. And that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up just one tick outside of the range where it's been for a year. 4.3% is still a low level, but I think this speedy decline in both supply and demand has certainly gotten everyone's attention.
Follow up, if I may. You mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PCE numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in. And it's a good bit from consumption. It looks like consumption was stronger than expected, what we got earlier this week, I guess. And also we're getting, a fairly narrow sector is producing a lot of economic activity, which is the AI build out and, business investment. So we watch all of it. And I would say we did move up. The median for growth for this year actually moved up in the SEP between the June and September SEPs. So, and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
Nicole. Hi, Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation for a segment of the population?
Housing is an interest-sensitive activity, so it's at the very center of monetary policy. When the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that, and they were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and so rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates. And that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help, builders will help supply. And so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot big changes in rates to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy. That's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people, and all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out, and so that's where it is.
And just a quick follow-up. During the last SEP, or the press conference following the last SEP, you seemed to indicate that policymakers lacked conviction about their projections, and I'm wondering if you still feel that way.
Forecasting is very difficult even in placid times, and as I've mentioned before, forecasters are a humble lot with much to be humble about. So I think right now is a particularly challenging time, even more uncertain than usual. And so I don't know any forecaster anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. If you're cutting rates, why continue to reduce the size of your balance sheet, then pause the unwinding?
Well, I think we're cutting the size of our balance sheet quite marginally now. As you know, with the balance sheet, we're still in an abundant reserves condition, and we've said that we would stop somewhat above an ample reserves level. That's where we are, and we're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant macroeconomic effects. These are pretty small numbers moving around inside a giant economy. The level of runoff is not very large, so I wouldn't attribute macroeconomic consequences to that at this point.
And at his recent confirmation hearing, Stephen Miron brought up that the Fed actually has 3 mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. So what does Congress mean by moderate long-term interest rates? How should we understand that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So we always think of it as the dual mandate, maximum employment and price stability, for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that we somehow incorporate that in as something in a different way.
Thanks, Chair Powell. Matt Egan from CNN. We recently learned that average FICO credit scores are down this year by 2 points, the most since 2009 during the Great Recession, and delinquencies are high for car loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumer finances, and do you expect today's cut will help?
So, we're aware of that. I think default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall they're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have a visible effect on that, but over time, a strong economy with a strong labor market is what we're aiming for, and stable prices. So that should help.
Just to follow up, this rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially fueling a bubble?
We're tightly focused on our goals, right? And our goals are maximum employment and price stability. And so we take the actions that we take with an eye on those goals. Separately, and that's why we did what we did today. Separately, we monitor financial stability very, very carefully. And, I would say it's a mixed picture, but households are in good shape, banks are in good shape. Overall, households are still in good shape in the aggregate. And I know that people at the lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. We don't have a view that there's a right or wrong level of asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities. And I would say those are not elevated right now.
Jean, we'll go to you for the last question.
Hi, Chair Powell. Jean Young with M&I Market News. I wanted to ask about inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, I'm wondering, do you see evidence that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
So as you said, shorter term inflation expectations have tended to respond to near term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little while to get back down. Fortunately, throughout this period, longer term inflation expectations, both break even in the markets and almost all of the longer term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of running at levels that are consistent with 2% inflation over time. So we don't take that for granted. We actually assume that our actions have a real effect on that, and that we need to continually show and also discuss our commitment to 2% inflation. And so you'll hear us doing that. But we're, as I mentioned, it's a difficult situation because we have risks that are both affecting the labor market and inflation. Those are our two goals, and so we have to balance those two. When they're both at risk, we have to balance them, and that's really what we're trying to do. Your latter part of your question was about independence. I don't see market participants. I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
Well.
One second. What happened? What happened to the stream? Live streaming. Are we still good? Can you all see me, guys?
Yeah, it's all good. It's all good.
But why are we
No worries.
You checking on your phone, or were you checking?
I'm just checking my desktop right now.
So why did we go from 600 people to 60 all of a sudden? What happened there? This is a bit sketchy. Let me see real quick. Anyway, guys, since I'm not so sure what's going on, I'm going to end the stream here because I'm a bit sketched out. You guys are saying still here, but we just went from 600 to 12. Okay, this is very sketchy. Okay, everybody, if you're watching this right now, just say, yo, I can see it, because this is sketchy as crap. It's showing 12 people are watching, but I think there's more people in the chat than 12.
Yeah, I'm not sure how that works.
It says 13 people watching now.
No, that's way much. I think it's manipulated.
Are you guys on your phone watching this as well? Can any of you confirm if you see the same? Can y'all see it as well, that it says 13?
13, yeah, that's crazy.
Oh man, I already changed the title. I was changing everything. I was like, okay, they took my stream down again. For all of you that are wondering about that, like, you YouTube has taken my stream or my channel down multiple times, right? So the moment I now see like, okay, the views are dropping, I'm like, okay, they banned me already. I'm like, okay, maybe I can still prevent it for some reason. Wait, why do we have 8 viewers? What is this? Wait.
That's crazy.
On my phone, it says we have 8 people watching. Wait, what?
On my PC as well, my phone as well. This is crazy. I guess YouTube didn't like the Arnold voiceover, but I don't know, man.
But what is this? Wait, I'm gonna take a picture of that. That's. What if now my channel is just getting completely? Cliffy says obviously way more. Look at the chat. I mean, now I can see, yes, but.
You know, maybe YouTube thinks I'm AI. You know, not just the viewers. You know, this is crazy. Never seen that happen before. It must be some kind of visual glitch. It can't be accurate because there's clearly more people in the chat. Yeah. iPhone
But it's also
23.
in my like wait, let me see if I can let me share with y'all's this wait, how do I let me stop screen there and then press share screen here, share screen. For all y'all funny ones. So this is what I always see, right? This is like a little overview that I can see. It says concurrent viewers 17. Look at the look at the graph. So now it says we have 0 people watching. The reason I'm always afraid of that is because you know, if it's a visual glitch only, I care 0%. But if this is happening to somebody else, then let me see some other people. Is anybody else streaming right now? Like maybe they have the same issue.
Wait, I'm looking at the FUT account. No, some random guy I clicked on. He's all good. He's all good.
No, that's very bearish. Oh, yeah. FOMC also has 12,000 people.
Wait, maybe because you were streaming the meeting that they like punish you for it or something.
No, but that doesn't change anything.
It's like I don't know. It doesn't make sense.
No, that still wouldn't put your views at 0.
Anyway, let's just assume it's a glitch.
All right.
It's
sketchy though. Very sketchy nonetheless.
Yeah.
Okay,
so price.
Wait, what did you put on, bro? I can see what do you have on your screen?
I gotta give credit where credit is due today.
Can I show that? Can I show
Sure,
your
no problem.
This is what you came up with. I love that.
Again, we gotta give credit to chat. Today nothing happened, but on a serious note, just stop sharing that. I'm gonna grab the chart. It has been a little bit messy, but like nothing special has been going on. Again, which is a victory for us. But to sum up what Powell was saying, and it was, in a way, he was really trying to avoid being like concrete on what the next measure is going to be. But the biggest and most important thing that he basically said that there's more cuts coming. And he couldn't really determine if it's going to be like a steady amount of cuts. It's going to be just, 0.25 again, 0.25, or if it's going to be more. But from what I understand from his language, body language, and the way he answered questions, is that, number one, there's also a lot of uncertainty about what is happening in the economy. But there's more rates cuts coming. So I think that is quite worrisome to a certain extent, because he sounded at the beginning, he sounded very dovish, and then hawkish, and then he was like uncertain. Like he sounded like a con artist at one point. He could have said anything, but there was no clear answer at this point, But Marcus is AI, actual intelligence. No, but on a serious note, is this worrisome? For now, no. But on a bigger perspective, if you look at it from a higher time perspective, uncertainty is never good, especially when there's uncertain comments coming from the head of the Federal Reserve. So That being said, price really hasn't moved that much. But what can we expect now is the question. For now, range. We're all heading into a range, heading inside of a range right now. If you look at, for example, ETH, we're ranging ever since we reached the 200 EMA. So you have my screen on, right? Let's see. Yes, you have. So this is the range we are in right now for ETH. There is going to be a breakthrough at one point. So when you have this ranging action, if you want to trade this, just trade the extremes. So what I mean with the extremes, just trade this part of the range or just play this part of the range. Don't try to sit in the middle because, and I'm just going to remove this one, otherwise it's confusing. But at the same time, this can go range for, technically speaking, this can range for one more day, 2 more days, 3 more days, or a whole week. So if you want to trade this, on the short term, because on the long term, it's clear, ETH is quite bullish. On the short term, how I would trade this is look for a clear breakout and not like a small breakout where we go like, let me just get my pencil, like price goes like this, moves up, comes here and just dives back in. That's not a breakout. What we want is like a clear, and this can go either bearish or bullish. I'm just going to draw it bullish because we're still bullish, I'm going to call upon the gods to keep bullish. Is that we're going to have this movement here and then this sudden upwards movement. And then, okay, where do I want to buy on the short term? Well, probably around here when price pulls back. And then your minimum target would be the next high. That's usually how you can trade a breakout like this. And will there be a breakout? 100% sure. It's a matter of experience and patience to recognize a real breakout in compared to, well, the chubby price action we had over here, for example, with ETH. So that is that for ETH. For XRP, there was quite some movement, especially on the M1 1-minute time frame. Yeah, that's just range. M15, same. We're also inside of this range. Expect this to continue for at least tonight. People still have to interpret everything what Jerome has said during the meeting. But yeah, there's gonna be a breakout sooner than later. So again, for XRP, I'm just gonna remove everything because it's a bit choppy. Try to trade the extremes here as well. So if you want to short or long, do it in the extremes, so in the outer levels of the range. But again, trading a range is never one of the best things what one can do. Of course, we're still eyeing at a bullish continuation, especially after we broke this level. If you want to play it completely safe, if you want to trade with leverage, you can try put a limit order on the next high, because then it's clear that we broke structure here. We broke it, we pulled back, and then a continuation. So price would be much more confident in where things are heading. On XRP, we also touched the 200 EMA, so it's especially good if we could continue and break this high, because then it's clear we came back, we broke structure, we tested the 200 EMA over here, and we continued upwards. So for BTC, probably same scenario. The range here is even worse. However, the biggest difference here is that we haven't.
Fun fact: I'm not sure if this post by Trump is real, but people are saying that Trump is going crazy on Powell on Truth Social. I'm gonna grab it on the side while you talk.
Sure.
Sorry. Well, I think it's about him not cutting it enough.
Yeah, that's just typical Trump. Nothing new here. So Bitcoin, same stuff, just a more awful range, but we haven't pulled back to the 200 EMA. Let me just grab my circle. So expect Bitcoin to first reject this support resistance, and then finally touch the 200 EMA. It doesn't have to do it, but it would be a lot better if you want to hop on the trade to first see, okay, we're going to test the 200 EMA. We're going to test the waters over here. At the same time, we're going to test this resistance zones or this resistance zones, depending on how thick, on how vertical the wick is. And then ideally, again, if you want to trade really safe with more confluence, stacking confluence is always great, you know. When you don't like risk, is that price goes down towards the EMA. We're going to range in the 200 EMA and then shoot up. And then, again, try to set a limit order on the new high. So then this would be your position. And then we could continue up more higher. So that is that for the time being. Was it disappointing? 100% sure. I'm a bit disappointed myself because we expected a lot more volatility, but again, as I've said before the announcement, if we keep relatively stable and we keep our eyes on the price, which is still more bullish momentum and a stable crypto market, I think that's a win for us as well. So I would say, you know, I wouldn't even call this a stalemate. I would still call this like a minor victory. You know, nothing crazy happened. We're still stable. Our coins are all stable. Nobody got shaken out, you know, unless you had crazy leverage, but I hope you didn't. Maybe you made crazy wins with crazy leverage, but who knows?
Talking about that, my thoughts are actually the opposite of what you're saying now. I think, real truth, that was a pretty good move. I mean, at the end of the day, we did talk about getting out of the positions like a few days ago, maybe 3 days ago, to buy back cheaper. I mean, from wherever you got out, I think XRP would have been above 310. You could have bought at 297 if we're just specifically talking about XRP then. Can you say it was a disappointment from what we expected percentage-wise? Sure. But I mean, going from 319, 320, all the way down to, let's see here, right now, 298, 297. It's a pretty good discount. It was a pretty volatile movement. I mean, especially from a 4-hourly perspective here. You know, I mean, it does actually look quite crazy just from a 4-hourly. And by the way, that post, that tweet, everybody's talking about Trump, but no, it's not real. I mean, I just checked Truth Social, which, by the way, what a garbage ass platform. You know, Trump is good in a lot of ways, but this platform is ads on top of ads on top of ads. I don't know who designed it that way, but so this is what they're stating, and again, this is not true. But Beardo prefers the term satire, but this is being spread around everywhere right now. It says Jerome Powell just cut interest rate by a teeny 25 basis points. Wow, what a genius move, said no one ever. Total idiot. Could have been 100, could have been 200. If I were running the Fed, we'd be cutting rates faster than Sleepy Joe can eat an ice cream. Can't get brain freeze if you don't have a brain. Let's pick up the pace, Jerome. 100 basis points next meeting or you're fired.
You know, I do wonder, is he running his socials? I don't think so.
I mean, it's not him, right?
Yes,
it's a fake post, but regardless.
yeah. No, but
brother, you
no. I phrased it differently. In a way, like he has more rants like this, but the question is, does he really post it? Not specifically this one, but
I mean, I always wonder that too, because you think he's the freaking president, but then again, his posts are so Trump. You know, they're so Trump, which makes me think, this guy maybe. But then again, I'm thinking a president can't write his own tweets anymore, right? It has too much effect. But I wonder the same for Elon as well, for Elon Musk.
No, I think Elon definitely runs his.
Right? You think he's square enough where he just takes all the decisions
he's
himself?
definitely too square enough. You know, he's really square. You know, he has a.
Studio says, why does Trump post stuff like this? Well, this one specifically is fake. I don't know. I hope people realize that this is a joke. Like, he's not making it seem as if it is a joke, but this is not real. It would be really funny if it was, though, especially from the 200 base point rate cut. That would be pretty funny. Imagine just cutting it by 2%. That would be pretty funny. Kung for 2% says, I want to see Jerome Powell is typing. I mean, I wonder what he would say to something like this, especially the... You're fired. Anyway, that would be pretty funny. I was going to say, I mean, you can say what you want to say, but it was a pretty good discount for anybody who sold based on the idea that a buy the rumor, sell the news type of environment was coming. Because even though it's not the craziest of dumps, sure, and we actually dumped more just a few days ago, hey, I mean, both of these were in the range of the buy the rumor, sell the news announcement. And like I said before, from top could have still been a 7.5% discount. And with our leverage, especially because all our positions are 10x, I mean, that's still 75% of whatever margin we put in, right? So from that angle, it's definitely a pretty solid difference right there. So I see it the opposite way. A bit maybe disappointing throughout the day. Man, also these freaking bots have entered the stream now. I see this friends who has. I'm gonna ban that user and delete their comments. There we go.
These bots are awful, really.
But still, by the way, we're still having 16 viewers, and there must be more people because there's people talking in the chat.
Yeah. Can we check it one more, guys? Can you just say hello in the chat or something, just to see how many people we approximately have? Because this is quite confusing.
So for you, it still also says a low number, yeah? For me, it says 16.
Yeah, for me, it says 16 as well, but it can't be accurate.
Why do you make them say hello? That's the most body thing ever. Say something else. Where are you guys watching from is the easiest one always, because then at least you see different answers. For NJ says 22. Hello from Chicago or Germany. Hello. Welcome to the chopper. I don't know all those lines though. You know, that's a problem.
We do have 300 likes. That's a problem for me.
Wait, what do you mean that's a problem?
I promise that if we have 300 likes, we gotta throw in some Arnold lines over here, but I'm not so sure about that anymore.
Yeah, I forgot about that. We have 314. Everybody, if you've been watching this for a second, now make sure you go ahead and press that like button, because why not? I mean, we're doing it for the 2 people watching. Hey, you two, whoever you are, it's me, or I guess, and one more person, whoever you is.
I think it's just us two.
It's just us. Imagine there's nobody else here. We're just like freaking. We're just bubbling it out.
Everybody in the chat is just a bot.
Yeah, there's nobody here. It's just the 2 of us, brother. Ever since Jerome Powell I mean, just for fun, look at the flat line. It's just since Jerome Powell was done, bam.
Yeah, we got nuked.
Yep, it's just you and me here, brother. I mean, now we can finally get over into some proper racist
Somebody
stuff.
says poll.
Oh, poll. Okay. Let's see here. Should. Oh wait, let me. So what do we ask? Should Mexico? Let's see. Should. Are you? Let me ask a neutral question. Are you bullish right now? Let me write it out. Question mark. Okay, now we saw my typing. How do I even do a poll? Here we go. Start a poll.
Oh, there we go.
All right, let's get this going.
Check it out.
Now we can see how many people are watching, sort of. Okay, at least 35 people. All right, let's see. We have 55 votes in a few, okay, 39. Oh, 65. There we go, 58. I don't know, some of you guys are retracting your votes. I guess maybe you have a second opinion right there. Everybody, if you're watching this stream right now, the only way for us to check how many people there are with an account is by every single person voting yes or no. I should have also put an option that you do not know, but just pick one. The answer doesn't really matter too much. It's just a little gauge. Okay, so we have at least 100 people in. That's interesting. That's very interesting to say the least.
What's up, John?
What did John say?
He's just calling out our names.
He's calling out a hit, brother. Be careful. Don't tell
Hello
him what's
from
up.
Greece.
Oh, yeah, there we go. We got a couple of people in. Anyway, somebody else was asking before what the next rate cut is going to be. I mean, right now, over on Polymarket, it says it's going to be, I mean, it's 80-20 for 25 again. Oh, now it's actually 87. So it's 80 and 7, interestingly enough, for 25 base points and 7% for 50 base points plus. I mean, I still expect it to be another 25. Probability of them doing something crazy. It could change as more announcements come out or new data comes out. But I don't think it's going to be 0 because I think Trump would actually go completely ballistic if that were to happen. I don't even know what he would do. I think he would just go full gorilla mode.
Yeah, he's going to chimp out. He's definitely going to chimp out.
Imagine seeing him live on air being a freaking rip off his clothes and stuff. And 50 is such a hefty thing.
50 is going to do some damage, I'm not going to lie. But that's the thing, because it's so uncertain. The way he spoke about it as well, it's almost like he's not even sure anymore how much they're going to cut. It was clear from what he was saying that there's going to be a continuation of cuts, at least this year. But it's quite worrying because he was really trying hard not to give any specific info. And that's either because he simply doesn't want to and he just wants to keep every option open at this point, or it's because he simply isn't sure at this point. And if he's not sure, that's, it's like you don't want that for the market. You really don't want that. So I think the next meeting, it's going to be I think it's going to be relatively more risky because now the chances of hitting 50 base points is significantly higher than today.
But I don't think there's any chance he's going to increase. Imagine he actually increased it by 25.
No. I think Trump is gonna.
He would actually implode or explode or something like that.
He's gonna go ballistic indeed.
Yeah, I think he'd fly straight there and just start smacking him like full MMA style. But yeah, I think conclusion is probably another 25, and I think it's going to be 3 throughout the year, so another one afterwards as well. I mean, the probabilities are set for that. And indeed, you're making me wonder now as well. Why did he not want to? But I guess he never really does confirm, right? He's always vague when it comes to these things.
Yeah, but now I thought like his body language, and I'm no psychologist by any means, but from what I could read, he was really trying hard not to give, like extra hard to not give any concrete answers. And yes, he's always vague, but something felt like off today, like there was a discussion because the new person that came, and we heard it in the. We heard him say it as well. The woman that asked him the question, this new person that came from the president's office. So politics has entered the chat as well. And we all know what Trump wants. And I don't know how much pressure this new individual can put on the Fed. But time will tell. Time will tell.
Nicholas says, what color was Powell's tie? Does anybody know?
Well, that's a good question.
By the way, I think, let's see, we had about 150 votes or a little bit more than that, 160 maybe.
So probably like 200 viewers, something like that.
We got the core here today. The real ones, the proper people. That's what I like to see. We had 160. Ooh, that's good. That's proper. I have no idea what his tie was. I didn't even know he was wearing a tie.
Can you bet on that as well? Color of his tie?
I don't know. Don't say that B word. But sure, yeah, it was purpley. I don't know. What color do we call it? I'm gonna call it purple. Somebody says blue black. Morgen pik papi. All right, morgen. Morgen. Let's see, 304. Actually, we're not doing that bad. And fun fact. My thoughts, right, as I stated throughout the past couple of days, is buy hard into whatever dump comes up. And I mean, you could have gotten in 296. I mean, honestly, I expected to do a bit more of a dump, real talk, like man to man, but still was a pretty good entry if you were paying attention.
The thing is, it's true, but the reason why it's difficult because when we were dumping, now we have, of course. After everything has passed, we can say, okay, it was a good moment to buy. But at the time, because of all the uncertainty, it's difficult, like for most people to say, like, okay, is this like the final point where we're gonna go up or are we gonna continue down? So it was difficult. But yeah, if you bought, I agree, it was definitely a nice discount area. But we will tell.
Lorenzo is. Oh, sorry, go on.
What do you guys think about the whales waiting for the big pump? I mean, why wait when they could bump the F up? Well, depends also on many aspects, but I mean, when it comes to whales, well, we saw that one whale. He went crazy long with the Bitcoin. How much was that long that he opened?
81 mil, I think.
That's quite the position. But for the rest of the whales, I'm not very certain at this point.
I want to say something, but I'm a sometimes keep my knowledge. I'm gonna keep my knowledge for myself. Let me just go to whatever I was gonna go to. Where was the? I keep scrolling past this one. That's why they took the viewers away, huh? Someone just opened an $81 million long on Bitcoin just ahead of the meeting. I do wonder if he came out on top or not, because I think his entry was 15.5 probably. I mean, right now we are 15.7. So, I mean, he could have probably sold it for even more somewhere throughout.
That's still a degenerate long, really.
I mean, come on. All right? I mean, come on. Alcoholic says, moving on up, moving on down.
Somebody said 552 is the amount of people in here. Load view, how can you tell?
Brother.
Is that a...
For me, it says 0. It's just me and you, brother.
Yeah.
Don't worry about all these. They're all fabricated. They're all in our head, brother. There's nobody here. All right? This is all the...
We're going to wake up. Bitcoin is at 5.6 million. Don't worry. This is all an illusion. All of this.
Brother, all that stuff from the past is catching up to us now. This is the proper hallucination. There's nobody. We're not even live right now. That's why it says 0. Right? Oh, my days. It's Marcus and Skynet. I'm ghosting. I'm watching.
Yes.
See, this is all our it's all our imagination. All these names like Mike G. You see, they're too generic. And Mark M. And we have, look at this. I'm not joking. We have John MC, Mike G, Mark M. We couldn't even come up with proper names. Yeah, these are all.
Bye-bye, Hans.
Someone dumped on you? Not really. I mean, we're not doing too bad. Like, the dump that I was expecting was primarily because if everybody's expecting it to be 25 basis points, the market usually dumps significantly more. But in this case here, we can see this as something pretty positive. There's almost no way to flip this into a negative thing. Because even though some of the boys, I'm going to scroll past it quickly this time, we're saying, let me quickly find it here. I have to scroll past it again. I really do believe so. Yep, I'm going to have to scroll.
History Bear donated $2. Thank you for that. I'm a figment of your imagination and mine.
I'm happy you don't laugh like Arnold. I don't know.
How does he laugh? I don't even remember.
I have no idea. Does anybody know how Arnold Schwarzenegger laughs?
Get to the chopper.
Let's see here real quick. The laugh is cold. I gotta watch this now. I gotta see how he. Oh, but why does this streaming method? The only not so nice thing about it is if I want to show something like this, I have to go do it. A really cumbersome method. Here we go. Okay. Oh.
It's a horrible sound.
I'm not hearing anything. There's
no,
nothing.
I'm not hearing anything as well.
Shut up, bro. Let me hear the sound. That was it. That was the climactic. Well, there you go. Now we know that, I guess, as well. So, stick to crypto because your IT skills suck.
Damn.
I'll take that one. You know, I'm gonna accept that one. You know what? I'd like to see you do it, but maybe you can't do it really properly. So I'm gonna just sit back and say, you know what? Fair game, brother. Fair game. We can't be freaking geniuses in every field. And I guess IT ain't mine. But it's all good in the hood. No worries. We get it done, even though we're a bit slow. Wood Monkey, I like that name, brother, says, now they made everybody bearish, so up only. I was trying to showcase the 𝗓𝗏𝗀 post from just now. Oh, yeah, by the way, like from the baseline, I am 0% bearish on crypto right now because think about it. The Trump guys, they're not going to let this go to 0. Like, there's no chance. Like, there's just no chance in hell. I was going to show you 𝗓𝗏𝗀 post, but I lost it somewhere throughout the depths here. He basically said bearish throughout the week, bearish throughout the month. But I really think it's just, it was that post that I keep skipping. That's why. It is this exact post that I have to keep going over. He said, doesn't matter what the decision is, lower by the end of the week, much lower before the end of the month. I still feel as if the market is not going to actually go that low this time around because the majority of it would have already happened now. Then again, we're not completely in the clear, but I still think it's a better theoretical idea to buy into this weakness than to sell off into it.
Again, the only pair that I do see dropping
I'll show your screen, yeah?
Yeah, that's fine.
Oh, nice. I like the PFP. There we go. You guys convinced him. All right, there we go. Sure.
Still
You're on.
Bitcoin. I think it's just much more likely that we're going to touch or at least get around closer to the 200 EMA, just like what we have seen from XRP and from Ethereum. So I would say in that regard, Bitcoin is just lagging a little bit behind. We're still fighting this resistance zone as well. Take that into account. We still haven't broken it. We just went deeper inside it, touched it, perhaps even swept it. If you look at another information source, chart source. But yeah, ideally, again, when you want to buy Bitcoin, leverage trade, try and wait until we are done fighting the 200 EMA. So then,
not financial advice, by the way, just his thoughts.
Just my unique thoughts straight from Austria. And yeah, when we are inside the 200 EMA, again, expect first some ranging. That's the most likely. I don't know if I can highlight it like this, but you get the idea. For the rest, again, what I do have to point out, it's just the most likely, but we still have to get out of the current range we are in when it comes to Bitcoin. So yeah, there is more chance that we're going to still hit the 200 EMA. And I must say it would be better. But if this range is going to continue bullish, sure, fine. For the time being, just wait. We're in a range. Nothing spectacular is going to happen in 10 minutes or something like that. Just wait until there's a clear breakout. And how does a clear breakout looks like? One might ask me. Well, I can just pop up an example for you. A clear breakout outside of a range would be something like this, where you have the range just going up, down, up, down, up, down, up, down, and then this sudden burst upwards. That would be the perfect scenario, of course. But as you all know, in the financial market, nothing goes very perfectly or hardly. So you got to interpret things in a different way and see them in a different way. But at the same time, see how XRP pumping, as some biddies say. Well, we're going up just a little bit, but we're still well within the range as of now. And we're actually ranging inside of the 200 EMA on the lower time frames as well. So that is that for now, guys. I would say just sit on your hands. If you don't want to trade any ranges, just wait for a breakout and then reevaluate your positions. But again, I want to zoom out, say again, and guys, again, if you want to see these analyses on the Discord, link in Dusty's bio in YouTube, or on X is where I share everything. On Discord, we can discuss things. You can ask me questions, whatever. I would just like to announce that sooner than later, we're also going to do live trading. I will be doing that together with Dusty. We're going to live trade for you guys and just be transparent as possible. Mostly going to scalp. For how long, we'll see, but time will tell. Besides that, I also want to take some time into educating some of you guys who perhaps have less experience or are still struggling with a certain type of strategy, what to use, mostly short-term strategies. So we're going to get to that as well.
Somebody's saying, oh, is there just 3 people? No, YouTube is messing us up a little bit. We don't know exactly what happened, but as at this point, if you're watching, you might be the only one. You may not be. We're not 100% sure on that. Regardless, there was something funny that somebody just sent to me. I bookmarked them. Who cares about FOMC? Praise God for waking up today. I'm thankful for the day. Take the day off. I don't care what happens. I like the message.
I like the message as well. I think that's a nice message to,
But take the day off. This is an interesting debacle, right? Where you're always in the middle of, I mean, I understand it. Don't trade on such a hefty day. Don't look at the markets on such a impactful day. But on the opposite side, you don't want to be left out when all the news comes out, right? Like it's a bit of an iffy-wiffy one. It's a bit of a 50-50 deal where, I don't know. I feel like here's another one that I got shared just now. Unbelievable backpack to human ratio right here. I think it's
And
the perfect ratio.
Leave my short king alone, man. Come on.
It's the perfect ratio right there, my boy.
He has packed all his rage from being bullied for having that height. So please give him a second. Snil. It's
perfect though. Wait, what? That is insane. He got really lucky. He found the best.
He looks like the hunchback from 300. You know, the Spartan.
Oh, that is amazing. I like that. I wonder how many people are going to fall for this post, by the way. It's already at 100K views now. The Donald Trump one, the fake one. It's going to probably go crazier and crazier.
I think it could have been like legit, but like the last part where it says like Jerome 100 basis points next meeting or you're fired, that's where I think a lot of people realize this is cap.
I think the 200 maybe is the one. If he just said 50 or 100, I think it would have been more realistic because 200 would be crazy. The rest, it sounds... I'm not sure. Has he ever said, Joe can eat an ice cream, but you can't get brain freeze if you don't have a brain? Has he ever said something like that? I mean, it does sound Trump-y.
True. That's why something close to it. Always Sleepy Joe with his ice cream. He's too busy with his ice cream. Something along the lines of that.
It would be so funny if he actually tweeted that out. But he did not, unfortunately, Mr. Trump. It would have been funny, though. Yeah, so anyway, to conclude, I think we've included most of what we needed to say. Next meeting, most likely another rate cut. Probably not as eventful as this one. But I guess it depends on what comes out in the meantime. Theoretically, that one is way more important. But this one, everybody was watching because it started the new trend. The next one, most likely, is just a continuation of trend. However, in terms of prices, it could be even more volatile than this one because, well, let's see, I guess, what the rest of the data brings out. Today, you get yourself a pretty nice discount on coins. Some people are saying that, no, this is just the start. Don't get faked out the next few hours. Take a look at the next few days. I'm going to say whatever happens, at least from my perspective, I'm going to be buying into strength, or I guess into weakness, let's call it, rather than selling into the weakness because, well, a lot of beautiful things are coming off the crypto space. Many DATs, as we talked about before, these treasuries are coming up like crazy. Right now for XRP, Dogecoin, we've got ETFs coming up this week, right? Which is also pretty big news. Solana, Chainlink, even BNB supposedly now getting some massive new treasuries, but BNB not confirmed. It's just speculation going around. And then we have Eric Trump and his companies. One of them going public right now, right? And the rest of them, the way I'm seeing it is they're not going to let it go to zero. They're going to make sure this crypto space stays freaking flowy. And you can, I guess, agree to disagree, or I guess you can disagree with that, but let's just agree to disagree. I think that's about it for this little stream here. I think we'll be back tomorrow or the day after with another update. And yeah, boys and gal, all 0 of you watching right now, or 3 of you, if you enjoyed the stream, make sure you press that like button. And maybe you want to subscribe. If you're looking for a place to trade on, I've got all the links down below. Y'all know exactly which ones I use. They're always in the description. Payonics for the bots, Blowfin, you find the link down there. You can check it out. And I'm going to see y'all in another one. How's the Well-Fi bot? I don't have the bots open right now, but you can check it out. You can always just use the link down below. Check every single one of my bots or whatever. All the links are down below for everything you need. See you guys again. Hopefully somewhere tomorrow or day after. Let's see. Man, I love your new PFP, brother. I love what you've done right
Marcus, your chance to say I'll be... All right, guys, first and foremost, thank you for tuning in. And I think the last words of the stream will be, I'll be back.